What's up everybody, welcome to another episode of China Update, where I provide you guys with the most up-to-date political, economic and geostrategic analysis on the world's number 2 economy. My name is Tony, let's jump in. Okay, happy Friday everybody, I hope you've had a great week and are ready for the weekend. As you know, Kazakhstan looks to be facing its biggest crisis since it gained independence in 1991, with intensifying protests and now a Russian-led military intervention. Kazakhstan shares a long border with China's sensitive and hardly stable Xinjiang region. Also, there are about 2 million ethnic Kazakhs in the People's Republic of China, most living in northern Xinjiang and with varying degrees of cultural assimilation with the majority Han Chinese culture of China proper. What has been Beijing's reaction to the unrest in Kazakhstan? Well, first of all, I get the sense that Beijing, like many others, was taken by surprise by the sudden explosion of unrest in the country. Eventually, the foreign ministry made a boilerplate statement calling for peace and cooperation. So far, Beijing has publicly been supportive of Russian intervention in the country, calling the forces a peacekeeping mission. Indeed, centrally run state-run media argues intervention in this case is justified on 2 grounds. One, the right of sovereign nations to support regional stability. Quote, China and Russia will definitely support its stable geosecurity environment, end quote. And 2, preventing external interference in their backyard. Quote, potential interference in Kazakhstan's internal affairs from outside would trigger greater Russian moves to reduce geosecurity risks in Central Asia, end quote. Both interesting points for a government deeply committed to the principle of strict non-interference in domestic affairs. The elephant in the room, of course, is that despite public words of affection and cooperation, both Russia and China, and everyone else for that matter, know that these 2 giants, and increasingly Turkey, compete for influence in this region. Kazakhstan's oil and gas wealth has afforded it more economic independence from Moscow than many of the other Central Asian states, not the least because Beijing also has interests in the energy resources. Indeed, one of the first state-run articles I saw here in China on the protests this week was about China's oil and gas interests. Quote, a Chinese energy company also said on Thursday that its oil exploration projects are located far away from big cities, and thus have not been affected for the time being, while local businesses are all operating normally. Then the state media article quotes a Chinese energy company, quote, we're not thinking about pulling out of Kazakhstan because it's a very big part of our market. End quote. State media, unsurprisingly, has also pointed fingers at the West, with the Global Times expressing yesterday, quote, some media say that the United States was behind the violence, and the White House has denied the claims. By any means, though, if there is some force behind the demonstrations, the force that is strong enough to incite such nationwide turmoil, it's likely to be the West or the United States. The reason is simple. Kazakhstan is a large country located in Central Asia, and it is important to the region's geopolitical security. End quote. Okay, next up, we've been following the outbreak situation every day this week, so let's just have a quick update here about the situation. The situation has not blown up, but it is not yet under control either, and cases continue to leak into new cities and regions every day. In an interview with state media yesterday, Thursday, former chief epidemiologist of the Chinese Center for Disease Control and Prevention, China CDC, admitted what many have been saying for weeks now, that the outbreak in Xi'an is the worst China has seen since Wuhan, but then went on to express that it could end up being much worse. Despite claims from local officials that the situation in Xi'an is stabilizing, already very tight restrictions have become even tighter. Xi'an has now suspended all international passenger flights, as well as all domestic passenger flights in and out of the city. Several cities in both Henan in the north and the wealthy province of Zhejiang have discovered cases in recent days, though still in relatively small numbers. The city of Ningbo, which has one of the largest ports in the world, has seen limited lockdowns this week, forcing container freight stations to halt operations. Though still very much enjoying mainstream elite support, China's zero tolerance, also known as zero cases approach to the coronavirus pandemic, has become the subject of renewed debate, especially due to its huge and growing economic cost. For example, yesterday, Thursday, at a so-called 2022 China Economic Outlook webinar hosted by French-owned banking group BPN Paribas China, the bank's chief economist expressed, quotes, "We must learn a lesson from Xi'an. It doesn't seem that all the local governments are able to implement the policy ideally. So I think the central government has become more realistic. It seems that the central government has realized the cost of the zero COVID policy. It is definitely very expensive and hard to continue." End quote. Despite comments like this, however, it appears that China will stick to its zero cases policy for the time being. And we remember from a few days ago, international risk management advisory firm Eurasia Group identified China's zero cases or zero tolerance policy as 2022's biggest potential risk. Quote, "China is in the most difficult situation because of a zero COVID policy that looked incredibly successful in 2020. But now has become a fight against a much more transmissible variant, with border lockdowns and vaccines with limited effectiveness." End quote. In a shock to markets, it was confirmed on Thursday by a creditor that Chinese property developer Shimao Group failed to pay 645 million RMB, approximately $101 million of a total of 792 million RMB due by December the 25th of last year. Soon after the news, Shimao, which some commentators have warned is much more important from a systemic financial health perspective than Evergrande, suffered its biggest ever bond rout. The firm's 4.75% note due July collapsed 25.1 cents on the dollar to 45 cents at the end of trading last night in Hong Kong. The broader market for Chinese developer notes sunk with it. Shimao Group is China's 14th biggest developer by contracted sales, building residential, hotel, office, and commercial properties, and like Evergrande is one of the largest debt issuers in China's real estate sector. But unlike Evergrande, Shimao Group has been considered one of the healthier players in the Chinese property market. What has rocked markets is not that it has huge amounts of debt, but that even a so-called safe bet in the industry isn't a safe bet after all. Frankly, it's incredible that investors have taken this long to come to that conclusion. As we've discussed on here for months now, the housing crisis that China is facing is not a case of a few bad actors, but a systemic crisis across the sector. Indeed, with Shimao alone, credit assessors have repeatedly cut their ratings on the company in recent months, pushing it into so-called fallen angel territory in November. In December, JP Morgan described the announcement that Shimao would sell its property management assets a, quote, corporate governance red flag, end quote. Bloomberg analysts observed today, quote, "The plunge in Shimao bonds is likely to stoke fears of financial contagion in a sector that accounts for about a quarter of output in the world's second largest economy," end quote. Then today, Friday, Shanghai Shimao Construction Company, a materials supplier, defaulted on a $101 million project loan guaranteed by Shimao Group. Now, this is a private loan, not a bond payment, but it still hits creditor confidence, further tightening liquidity pressure. Indeed, the share price of Shimao Group Holdings slumped 6.2% in Hong Kong this morning after the news. Meanwhile, a property tax which Beijing has been trying to implement for years now, and which was set to be rolled out in trial form this year, looks to be pushed back once again. Peking University professor and legal advisor to the Finance Ministry of the PRC, Liu Jianwen, expressed in a widely circulated interview this week, quote, "Now may not be an appropriate time to launch the property tax trials as the economy and the real estate market are both under pressure," end quote. Washington-based veteran China analyst Bill Bishop observed today, quote, "Given the political importance of common prosperity, if there really now is a delay in pushing forward with even property tax pilots, then policymakers must really be worried about the economy," end quote. I tend to agree. Hey guys, I'd love to hear what you thought about some of the updates we covered in today's episode, so throw your comments below. Always love hearing from you. Thank you for watching. I'll see you next time.